Hey everybody, welcome back to another episode of Ryan Makes Sense. Apologies for the sinuses. We are looking at Spider Portfolio S&P 500 ETF here. Let's look at the chart. Let's look at what this is. Let's look at the expense ratio. This was a viewer requested stock to look at. So let's just do an analysis. So first of all, let's just draw on it first because I love to draw. We're looking at long-term support where the stock has always bounced. And I'm going to do right, I like here. I like a few spots for this one. I think just to do a catch-all, I'll do right there. So I just made a long-term support where the stock has never fallen below and closed on the monthly. So you can see right here, I can move it down a little bit. Right here begins a support. This is a 10-year support, bounces off, tests it right there, bounces off twice there. When will it fall back down? We do not know, but let's extend it upward right there. Okay, and now we're going to look at resistance where the stock has never been above the price. Or I'm sorry, that didn't make sense. Where the stock candle never closed above for the month. So we're looking right there. Let's make this a little bit longer. Right there is where they intersect. I'm going to guess this is going to be 2033 where we see a bounce off here. 2033. Why do I say 2033? Check the Periods of Panic by George Tritch. Do it. Okay, so the stock price has never ever closed above this line on the monthly. You're watching this video and it'll be December 2nd on the Monday. You're going to see, are we going to see the month of December? Are we going to see this close above this line? It depends on a lot of things. If I knew, I would tell you. I want you to benefit. Depends honestly on a lot of things. Depends on a lot of things. But let's look at the RSI and everything else. So let me just make this bigger. All right. So in terms of strength, we're at 58, which is great. Between 30 and 50, or I'm sorry, 30 is the low. That is oversold. 70 is overbought. So 50 is an area of strength where we like to see it go up. And it is currently, if you guys can see right here, it's going up. Momentum, you can see right here. Look at right here. And then I'm going to zoom up. I'm just going to keep my mouse where it is. See where right here, it went downward all the way down to right here. Now I'm going to put right here would have been the month to buy. You guys can right here, right? And now let's go back down to the MACD. We would have wanted to buy right here on this turnaround. So upwards, upwards, upwards. And if you look right here really close, you can see that momentum looks like it's going to continue upwards, which is a good thing if you own this long. Money flow appears that it's more on the stronger side than the weaker side. It's at 52 right now. And if we're looking at relative momentum index, this is almost above 70, which is great. A little hot in terms of momentum, but it's not over 70. So this, I think we're going to see continuation into December, but we could see a dip as well. And you're probably saying, well, where's the dip going to be? The dip will be likely, if it does dip in December, maybe it goes to 50. Or I'm sorry, yeah, 50 for SPLG. Or maybe it goes upwards. Based on momentum and all those things, it looks like it's going to move upwards. However, we could see a flash dip where, maybe there's a day or two out of the whole month where it just dips down aggressively, touches down here for confirmation, and goes back upward. There could be several things that happen. But right here is the apex. I guarantee in the next, let's see, November, December, January, February, March, within the next 4 to 5 months, we'll probably see the stock back at 53, whether we like it or not, because this is the apex. We have our midterm support followed by our midterm resistance. The stock is kind of like a little bottled rocket, and it's like rejected, support, rejected, support, rejected, support, rejected, support, and then finally it's going to choose a direction. So I say upwards in the long term, of course, but there's going to be volatility up or down. So you do with that what you will. That's just my opinion. And if we just go down to here and again draw the same supports, it looks the same. So yeah, I think the next few months, unless the stock really takes off and momentum goes like a rocket ship, maybe it never touches 50 again. But I mean, look at how well it's playing the resistance support here. So that all looks great to me. There is a 1.48% dividend, which is great. And I say that because I can do this, and I'll show you why. Stock or ETFs like this can benefit you in the long term if you have long-term vision and long-term investing horizon. So let's say 2024, you're turning over a new leaf. You're going to start investing $10,000 in the stock market every year, and you're going to buy this stock for some reason. So this is SPLG. So we're going to start out with $10,000 in 2024. If it loads. Okay, so we're going to do 10,000 here. And we're going to give $10,000 every year. And the annual dividend is 1.48. All right. 1.48, there we go. And the annual share growth, this is a Spider S&P 500 ETF. So over the last, 50 plus years, I believe it's been around 10%. We'll do 8% just to be conservative in terms of annual share growth. So 8% conservatively. And we're going to change this to 2024, 2025, and does it auto correct or auto? Doesn't look like it, so we'll just drag it down. Okay, so depending on your age, if you're 18, 20, 35, 33, if I did this for 10 years, I would be at $180,000 with annual dividends of $2,600. Another 10 years, I will have $600,000 with $8,800 in dividends. And another 10 years, when I am 63, I will have $1.6 million with annual dividends of $24,000. That's pretty decent. That's pretty decent. So again, that's the benefits of investing in the S&P 500 over long periods of time. The expense ratio, let's just check that. So the expense ratio is essentially the fee you pay over a span of, I believe, 10 years. Let's find out. What's the expense? Let's find out. Okay. Okay. Expense ratio is 0.02, and I believe is it yearly? Annually. Okay, so with an expense ratio of 0.02, you would be charged $2 a year for every $1,000 invested. So you guys can kind of see my screen. $2,000 a year for every $1,000 invested, and that means you have a State Street. So you have a fund manager updating the top 500 companies of the stock. You don't have to make emotional decisions because you don't buy in. This is not buying individual stocks. You're buying an ETF, which is a basket of 500 top companies. So you don't have to make any emotional decisions. You don't have to be swayed by individual companies going up or down. You just put $10,000, maybe do $5,000 every 6 months, and let's say you just put $750 in every month on the first of the month. That's it. You know, just whatever floats your boat, honestly. So SPLG, again, decent long term if you have a long term vision. This goes back to only 2009. I personally like VOO. I don't know what their expense ratio is, honestly, but let's compare Vanguard to that, because can Vanguard beat the 0.02%? And if you notice, it's literally the same setup here, where it's a bottled rocket, support, resistance, support, resistance. Again, the apex right here. So let's check that expense ratio. It's just loading. 0.03 and oh, nice. Oh, wow. Okay. The expense ratio is deducted from dividend and capital gains distribution, not the principal. So that's pretty cool. How is this? Interesting. You would have to do some research, but these are really good S&P 500 ETF products to look at. So do your own research. Check into each of them. VOO is a good one. SPLG is good. The SPY is typically just like the standard S&P 500. I think this might have a higher expense ratio. And I don't know how they take those funds from you, if they come from the principal or not. But again, you can see the same exact setup with the apex right here for the S&P 500. That's all I've got here. Let's just see if institutions are buying SPLG. So we can see if there's a trend of buying over time for this ETF. Oh my gosh, look at this. Look at this. That's awesome. That is awesome. It's about to break all-time highs, it looks like. Let's look at VOO. Steadily rising. It's not going to break its all-time high of funds right here, but steadily rising. So very cool, very informative. If you guys enjoy this video, or you like it or dislike it, let me know. Thank you for watching. Take care. Talk to you soon.